Economists don't expect tariffs and retaliation to have a big impact on the U.S. economy, believe it or not. But what about the unintended consequences? What could those be? Steve Liesman is here. He's looking at that for us. There's got to be a lot.
I'll tell you some right now in a speech breaking right now. Atlanta Fed President Raphael Bostic saying the trade disputes have wiped out his business contacts when it comes to economic optimism. Here's the full quote from the speech he's giving right now. Quote, "I began the year with a decided upside tilt to my risk profile for growth, reflecting business optimism following the passage of tax reform." Goes on to say, however, that optimism has almost completely faded among my contacts, replaced by concerns about trade policy and tariffs. So there's a big consequence, which is the one on sentiment and perhaps on investment. Here's what Fed Chairman Jerome Powell said last week.
Concerns about changes in trade policy are rising, I think it's fair to say, and also that you're beginning to hear reports of companies holding off on making investments and hiring people.
In an interview this morning on Squawk Box, even President Trump's top economic advisor agreed the tariffs have undermined confidence in some places.
We are in a period of uncertainty, and that period of uncertainty is visible in some places. You can see it in lumber prices and steel prices and so on. But again, the president's long-run objective is one that I think all economists should share, which is to get, think about all of the barriers in China. Think about the fact that China is stealing more than $100 billion a year worth of our intellectual property.
Hassett added that he thinks U.S. growth is strong enough to weather the uncertainty. The irony here, tax cuts were passed to boost CapEx. The trade and tariff disputes, according to Daniel Eichenson from the Cato Institute, could substantially offset that CapEx upside.
But what do economists think about all of this just being a negotiating tactic?
I think time is running out for that explanation on the street here. The president has been saber-rattling on trade since before he took office. He saber-rattled the day he took office. And there's very little to show for that when it comes to actual results from negotiating. NAFTA's not done. He even had a deal with China, where China agreed to buy additional U.S. products. The imposition of those Chinese tariffs last week, the Chinese said that deal is off. More and more, there's a Goldman Sachs report which now says that the imposition of the tariffs in July is their base case. Those was not the opinion of economists beforehand that sided with this idea. They were negotiations. More and more, the feeling is these tariffs are real, get used to them, and they're going to grow.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.